Good morning and thank you for joining us on the program. I am Bisi Adebayo. Oil prices lost some steam today, and that was caused by tighter lockdowns in Europe and the forecast for a slower recovery in demand next year, which outweighed relief from vaccination rollouts and concerns about flare-up of tension in the Middle East. Brent crude futures fell below the $50 per barrel threshold to $49 per barrel, while US WTI crude futures declined to $46.71 a barrel in early trade. OPEC on Monday pared its forecast for a recovery in oil demand in 2021 by 350,000 barrels per day due to the persistent impact of the pandemic, but then says that a rapid rollout of vaccines in major economies actually provides potential upside for next year's growth forecast. In a sign of weaker demand, analysts expect data from the American Petroleum Institute later today and the Energy Information Administration on Wednesday to show that U.S. gasoline inventories rose by 1.6 million barrels last week, while distillate inventories, which include diesel and heating oil, rose by 400,000 barrels. Oil prices had found some support after a fuel transport ship at the Saudi Arabian port of Jeddah was hit by an explosion on Monday, but the kingdom's Ministry of Energy noted that that incident did not in any way cause an effect on supplies. And back home now, the latest data from the National Bureau of Statistics shows that the total value of capital importation into Nigeria increased by 12.86% to $1.46 million in the third quarter of the year. Now, that amount represents a 74.03% decline when compared to the value recorded within the same period last year. The largest amount of capital importation was received through other investments, which attracted $639.4 million. And next is foreign direct investment, which accounted for $414.79 million. And in third place is portfolio investment, which contributed $407.25 million of total capital inflow. The United Kingdom emerged as the top source of capital investment inflow with $594.65 million, while Lagos State was the top destination of capital investment at $1.2 million within the period. We'll be analyzing this data much later on the program today. But meantime, let's talk about the housing deficit in Nigeria, which has been a recurring conversation over the past couple of years as the increasing demand for good and affordable housing continues to outweigh supply. The importance of a good housing sector plan cannot be overemphasized, especially in the nation's commercial capital, Lagos State, where the housing deficit is estimated at 2.5 million. Now, there have been several calls to bridge this gap through public-private partnerships. Now, these were some of the issues brought to the fore recently during the first real estate marketplace conference and exhibitions in Lagos, organized by the Lagos State Real Estate Regulatory Authority. But joining me now to discuss the real estate market in the state is a special advisor to the Lagos State Governor on Housing, Mrs. Toke Benson Awoyinka. Good morning, ma'am. Thank you for joining us on the program. Now, recently, you had stakeholders in the real estate sector gather to discuss ways to address the housing deficit facing the state. But can you give us the major submission put together at that event?
Oh, thank you and good morning, Lagos. So we as a regulatory agency, we've been trying to regulate the market. We've been trying to sanitize the industry, especially in Lagos. And we thought as regulators, we are also supposed to make sure that we give them a conducive environment to do the business. We're all aware that there's a deficit in Lagos, whether it is 2.5 million or 3 million. The idea is there that we all know that there's a deficit. So the marketplace came up last week in order to bring the developers, the various stakeholders in the industry to meet with the people of Lagos who are actually yearning for this housing. And I think the goal was achieved. We had a very successful conference where we discussed, amongst other things, apart from the deficit itself, we spoke about various other issues in the value chain of the real estate industry, the capacity building for youth and sustainable clean energy for the industry. We spoke about the capital market and providing solutions, financial solutions for the industry as well. And the governor was graceful enough to be there to speak to us and to also admonish some of the Lagos State government agencies to make sure that the practice of real estate is seamless and easy, where we have the private sector also collaborating with government to make sure that we bridge that gap in the housing industry. So it was successful. It was B2B. It was to make sure that the housing market comes together as that aim was achieved last week.
All right, now let's talk about some of the challenges facing the housing sector. Now, apart from the deficit, now we know that before now it has been some sort of free-for-all show in the sector with several sharp practices often reported. What game-changing strategy is being adopted to bring a change?
Yes, at the Regulatory Estate Authority, we have set up a portal where we want to register all sector practitioners. We have encouraged, we have spoken, we have cajoled, we have spoken extensively that there is need for us to be able to capture that data. Data is key right now. If we don't have the data of what you're doing as a developer, as a realtor, as an agent, or as a facility manager, then we would not be able to meet as government what we're supposed to do. So what we are doing is we're capturing the data of who is in the sector. We're taking it very, very seriously. We go out, we go and make sure that we see where your business is located. We do not want briefcase developers or briefcase agents where when anything happens in the market, we don't know where to find you. We've had couples of petitions against sector practitioners, and we're telling people we do not want you to deal with practitioners who are not registered with government. So we opened a portal at lagosstate.gov.ng, lasrira.lagosstate.gov.ng, inviting stakeholders in the industry to register whatever products that they're doing, to register as practitioners so that we as a government can also promote your business. It's the World Wide Web. So people all over the country, people outside of the country, people in the diaspora can actually reach out to you through that medium. So those are one of the things that we've been trying to do, making sure that everybody who is into that sector or who is doing any developments, real estate agent, practitioner, developer, facility manager, we want to know who you are. We want you to register with the state government.
Well, what about the level of awareness? Now, of course, you're doing your bit by encouraging people to come in and register with the state government. But what's the level of awareness like? Also, talking about the potential buyers of these properties and all, what's the level of awareness like? How do we actually capture everybody to be aware that there's a thing like this going on with the state government?
So like every new thing in the industry, we're doing a lot of advocacy. We've started this advocacy since last year. We're doing a lot of advocacy. The pandemic stopped our progress for 7 months, but since then we were back on the streets. And the marketplace was actually another good place for us to let them know that this is what is going on in the industry. This is what is going on. This is what the Lagos State government is doing. We would continue with that advocacy. We tell our people, do not patronize agents or developers who are not registered with the government. Because when these sharp practices happen, the only way we can get them is if we already have a database of them. We're going to probably by next year, we're going to do something like a roadshow in the diaspora, because we found that also that a lot of our citizens in diaspora want to come back home, but the first thing that anybody who is in diaspora wants is a house over their head. And they have fallen victim to a lot of sharp practices in the industry. So we are constantly engaging the practitioners in the sector and also the people of Lagos to let them know that do not deal with these people. When a practitioner approaches you and you ask him, can I see your LASRIRA number, or can I see, are you registered with the state government? Once they're taken aback that the people are actually asking for that, then the practitioners will start to comply. But we are doing our bit in trying to make sure that the advocacy and the word is out there on the registration.
Now, you mentioned earlier that you have several petitions talking about sharp practices now, but what have you done to actually nip this in the bud? Have you made scapegoats of anyone, for instance?
Yes, we have. We've had several matters ongoing in the law courts. We've had a property in Ajao Estate forfeited to the state government, which we are going to sell, and we're going to reimburse everybody that was defrauded in that on that transaction. We also had a case last year of 255 people in Ketu Alakpere we're presently in court. We have a case in Awoyaya Aja, about 145 people as well. We're presently prosecuting. So we're constantly prosecuting, and we're letting them know that we're going to follow the due process of the courts. We're going to make sure that we do everything as a government to make sure that those people who fell victim of those transactions are actually brought to book, and the people are actually reimbursed the monies that they have lost. So yes, we're making traction.
Now, past administrations have introduced a number of housing programs for the public. Of course, some were fully subscribed, while some are still empty as we speak. But are there plans by this administration to see that such structures are fully utilized to reduce the housing deficits?
So when the administration of Babajide Sanwo-Olu started last year, May, we inherited about 8 or more housing projects, which we are working on right now. Last year, so when you say they're empty, they're not empty. We're just putting the finishing touches there. Last year, October, I believe, we commissioned one of them. That's the Latif Jakonde Housing Estate in Igondo, which houses 492 families. We're going to commission quite a few this year. We have one coming up in Idale Badagry, that's 252 units. We have 136 units coming up in Ekmori. We have 100 plus units also coming up in Ekota. In May this year, we commissioned 2 projects on the Lekki-Aja axis. We commissioned 136 units on Freedom Road in Lekki, and about 100 and so units too in Igbokushu. So this year, hopefully before the end of this year, we want to commission, like I said, Ekmori, Ikota. Shangotedo has 774 units that we're also going to commission. We have 360 units in Igbogbo, and I can go on and on. We have 660 units in Agbowa Ekpe division. I can go on and on. So they're actually not empty. We're just putting finishing touches to them. As you know, they have been lying there for so long, and we want to actually put a roof over as many people as we can in the state of Lagos.
Now, you've talked about the several projects, housing projects scattered across Lagos State. And of course, yes, you say that you want to put a roof over the heads of so many families in Lagos. But then there's one thing that keeps coming to bear, and it's affordability. How affordable are these houses?
So most of the projects that we do at the Lagos State Ministry of Housing are actually social housing, affordable housing. We have a program we call the rent to own policy, which is actually midwifed by the Lagos State Mortgage Board. On that program, we expect you that whatever the amount of that house is, you pay 5%, a 5% down payment after pre-qualified. A 5% down payment is expected of you. And then we spread the rest of the balance of that property over a 10-year period. So we have homes like 1-bedroom units in Lagos for 2 million, 3 million, 4 million, depending on whatever area of Lagos that you're actually subscribing to. So they are quite affordable. The ones that government is doing are quite affordable. And we're also putting that structure in place where you can pay over a period of time. We know that it is not easy for people to come up with bulk money, and we're very sensitive administration. This has been ongoing in Lagos, but Mr. Babajide Sanwo-Olu has also taken it up upon himself to make sure that housing is one major component of the government that he's very interested in. And we started that. We started that with Igodo, and the rest of this other housing estates that I mentioned, we're also doing the same thing. We have the rent to own program. So we have people who can afford, who want to do the outright purchase. But we encourage people to do the rent to own, because that is what makes it comfortable and easy for people to have a roof over their heads. So yes, they are affordable, and we have policies in place to help the people.
But what about the low-income earners? For instance, the market men and women, how do we also capture them? Because it's not everyone who earns a salary. It's not everyone who can actually come up with a certain amount monthly. So how do we capture people like this?
So the interesting part of it is that you do not have to be a salary earner to qualify for the rent to own. And that's why I spoke about the pre-qualification process. So what happens is the Lagos State Mortgage Board looks through your finances and sees which you're best suited for. So if, for instance, I'm a market woman and I earn a certain amount on a daily basis, they look through my account and see, okay, For whatever we have to have you pay, you must not pay more than 33% of that amount you earn monthly. So we go that far in making sure that it's not just for people who earn salaries. We want the market women, we want the union people who also are daily earners of income to patronize this projects. So that's why most of the time people ask us why you're not building in the highbrow areas. We're not doing mid-income. We do mid-income through our joint venture developers, which is the private sector. But for the ones that we as a ministry and as the government are doing, targeted towards low income and people who would ordinarily not be able to buy a home for themselves.
All right, now let's talk about another major issue now, and that's building collapse, which has been a recurrent incident in the state. How is the government engaging these professionals, the private sector, and everyone concerned to ensure that there is full compliance to construction regulations in the state?
Okay. Well, we have the Ministry of Physical Planning and the Lagos State Building Control Agency. Lagos State Building Control Agency is actually in charge of building collapse. And that's why we actually encourage our builders. When you want to build, you make sure you meet the Ministry of Physical Planning. Before you break ground, Lagos State Building Control Agency is supposed to be there. We have the material testing. So we've put all the structures in place, but we keep begging and hammering and telling our people that these processes are supposed to be followed. They're meant to be followed to avoid issues like building collapse. But most of the buildings that you have seen that have collapsed are buildings that have been probably 20, 30 years old. The terrain of the place, Lagos is also a swampy area. The terrain of the place was not taken into consideration when those pilings or the foundations were being done. And us as a government, we're doing everything we can to make sure that we curb such things from happening these days. Our Minister of Fiscal Planning is very, very active, and they're going all over Lagos to make sure that we put an end to such incidents in Lagos.
Because there are also reports of buildings under construction actually collapsing.
Exactly. So that's why we have the material testing. So like the governor said at the marketplace, we need you to help us as a government. When the practitioners or the builders cut corners, this is what happens. So we complain as sector practitioners that it takes a while for us to get all the permits that we're supposed to get. But at the same time, we do not provide the documentation and the things that we're supposed to do. So the governor was quick to say that, do not help us corrupt our officials. When we ask you to do these things, do these things. When we ask for 5 documents, do not bring 2 documents and believe that once you pay your way through the system, you can get it done. Because at the end of the day, the people of Lagos suffer for it. So the governor has already said it in clear terms. We would no longer tolerate these things in the industry. And the Ministry of Physical Planning is on its toes right now, making sure that these incidents are a thing of the past in history, and they become history in our development process.
All right, now we need to wrap up this conversation in just a minute. But just before we do, tell us, how is the state moving to tap into the 300,000 federal government mass housing scheme set to kick off this week? Please do that in a minute.
Well, Lagos is a very peculiar place. And when people say there's a project or housing thing going on in Nigeria, Lagos has to take a very, very particular place in it, because the land in Lagos is expensive. Projects are built in maybe Zamfara for 2 million would not also be built in Lagos for 2 million naira. So those are the things there's some disparities and there's some things that we need to do to cross our I's and dot our T's to make sure that these things happen for us as well in Lagos. So of course, Lagos is ready and willing to tap into everything that the federal government and the other international agencies are doing. We are definitely ready to participate in everything that is being done, especially for housing in Lagos.
Would like to thank you, Special Advisor to Lagos State Governor on Housing, Mrs. Toke Benson Awinka. Thank you for your time with us this morning.
Thank you.
All right, we'll be discussing the latest capital importation data as well as exchange rate reforms when we return in just a moment. Don't go away. Welcome back. Now let's get a reaction to the latest Q3 capital importation data released by the Statistics Office late yesterday, showing total value of capital importation into Nigeria increased by 12.86% to 1.46 million for the period. A research and investment analyst at PFI Capital, Tumise Oyedepo, joins me now for this conversation, as well as the recent recommendations by the World Bank and the IMF, particularly about Nigeria's foreign exchange reforms. Good morning and thank you for joining us on the program. Well, let's start our conversation with the latest capital importation data. I'm sure you must have gone through that report. What do you make of it?
Good morning. Thank you for having me on the program. Thank you for having me on the program. We look at the release of the capital information importation documents released yesterday. We saw a year-on-year decline by a 74% year-on-year decline in the capital importation in Nigeria in Q3. However, we saw a 12.9% on quarter-on-quarter basis. If you look at the trend in capital importation in Nigeria for starting from the beginning of the year, it has actually been on a decline. In Q1, we started with a 5.9 billion capital importation, and also in Q2, we recorded 1.3 billion. However, this period, we actually recorded 1.5 billion. So to a larger extent, we have actually done well in terms of, okay, the way we deal with our capital importation and we are attracting investments. But if you look deeply compared to what we had last year, for the whole of last year, our capital importation actually has been declining starting from Q1 2019. If you can remember, by Q1 2019, we recorded a whopping 8.5 billion capital importation. But if you notice, it has been decreasing from 8.5 down to 6 billion in Q2, down to 5 billion in Q3, and down to 3 billion. So all this is not far-fetched from the fact that we actually were expressing high-risk business environments, particularly in terms of security that has been affecting businesses from going on well in the country. We see how business owners cannot even go about their business activities around the country. And also, one other factor that actually affected a reduction in capital importation over the years, starting from, I'm comparing the data now to what we had last year and what we have currently. If we look at the data very well, if we should sum up from Q1 2019 down to Q3, I mean the 9 months of 2019, we recorded about $20 billion capital importation. However, this year we have only recorded just 8.7 billion. That is a significant decline in level of capital importation. And one other factor that we can also say that actually affected this level, the low yield environment in the fixed income space. If you look at our foreign portfolio investments very well, 80% of it actually goes into the money market instrument, and due to the low yield environments and a whole lot of activities in the market, we have seen yield declining even down from 15%. It was down to even below 1% the treasury bill rates. So actually, this actually discouraged a lot of foreign portfolio investors trying to take advantage of the attractive yield. They are actually used to the era of having about 15% risk-free rates, and they are used to that. So when yield was declining, they had to move out of their capital. And we also noticed that we also have a loss of confidence from a lot of investors in terms of how the CBN tackled the issue of devaluation. If you remember last year, the CBN governor was saying that, okay, he won't devalue the currency until you see the foreign reserve down below $30. But right now, before he even devalued earlier this year, we still had our foreign reserve even not far above 35 billion. So this is showing a bit of lack of confidence from foreign investors, and they're saying that, okay, we don't really know what may come up in this economy. And so a lot of investors are discouraged about what is happening. If you also look at the equities market, if you look at the report released by the Nigerian Stock Exchange, In September, the ratio of local investors to foreign investors have actually increased. We now have 21% level of investment from foreign portfolio now at 69%. So this is showing a bit of investors are losing confidence in Nigerian capital markets and they're moving out funds. So foreign inflows actually, the percentage in relation to domestic investments actually reduced. So investors are losing confidence and they are looking at a high level of risk in the Nigerian economy. They are looking at security, they are looking at the power sector, they are looking at a whole lot of activities that are actually affecting business in the Nigerian economy. So
All
this
right.
is, okay,
All
thank
right.
you.
No, it's fine. It's fine. I have one more question for you, Tumisha, because we need to wrap up in a few minutes. And I want to talk about part of the IMF recommendations now, talking about a multi-step transition to a more unified exchange rate regime with a market-based flexible exchange rate. What would be the down risk to the naira?
Okay, if you look at the current challenge to in the Nigerian exchange rates, what we are facing an exchange rate situation right now, we are actually faced with like a trilemma policy option for the CBN government. We actually, number one, it's trying to attract investment from offshore, and we are also trying to have an independent interest rate to influence our slow economy, and we are also trying just to maintain a fixed exchange rate. That has been the likes of our presidents. So the administration is actually interested in having a fixed exchange rate. So the IMF, the loan they gave us earlier this year, about 3.4 billion loan. One of the promises we made to them was that, okay, we are going to unify our exchange rates. And also we are still also pursuing another loan from the World Bank, about $1.5 billion. So this is meant to actually reduce the negative impact of the COVID-19 effect on our FX reserves. So, and World Bank is saying, if you need to get this loan, you need to actually unify your exchange rate and try to adopt a more robust foreign exchange management. So, to me, what I'm looking at the CBN governor, what they're trying to do is, okay, if you look at their reactions to parallel market rates in recent times, they're trying to see how to bridge the gap between the parallel market rates and the official rates. So they are making a lot of efforts in terms of the way they treat foreign remittances through the IMTOs. A lot of reforms are going on right now from the CBN angle. But notwithstanding, if you look at what we currently have now, as at June, backlog of FX demand from importers and manufacturers are actually stood at about $7 billion. So we are in a situation whereby we are faced with COVID-19 induced impact on our foreign exchange earnings, and also our structural challenges that are even limiting us from getting FX earnings. We are actually a mono economy that we actually rely on.
All right.
So anything.
All right, I know that we can go on and on, but time would not permit us. Research and investment analyst at PFI Capital, Tumishe Oyedepo, thank you for sharing some of your time with us this morning.
Thank you.
We'll take a moment now and we'll be right back. Well, time now to talk commodities, and the research analyst at the financial derivatives company, Dumebi Iyeke, joins us now to discuss today's burning economic issues. Good morning, Dumebi. Thank you for coming on the program. Of course, we're expecting the inflation data for the month of November to be out any moment from now. But while we await that data, you guys at the FDC had projected that it would jump to 14.8%. So tell us what's behind your projections.
First off, we've seen the trajectory of inflation over the past few months, and it has been in double digits and increasing, at a very fast pace. And the major, driver of inflation right now is the food inflation. The food basket accounts for over 50% of the entire inflation numbers. And at this point, looking at the persistent increase in food prices due to supply chain disruptions. We also look at the exchange rate pass-through effect on commodity prices. We're looking at the effect of transport costs, the PMS price. We're also looking at the effect of the cost-reflective tariffs. And all of this put together has triggered a significant increase in food inflation, and not just even only food inflation, but also, core inflation. And at this point, these are the, major issues that, triggered our forecast of 14.8%.
All right, so we're waiting the data to see what direction the numbers would swing, but nonetheless, well, let's talk about the recent upsurge in the price of crude oil. Perhaps it could be some good news for Nigeria. Of course, we know that it's been very well above the benchmark of $40 per barrel for the 2021 budget, even though Brent has declined to about $49 this morning. But, well, I mean, many would say it's still not too bad, right? So talk us through the latest development in that space and what this means for Nigeria. Of course, everyone would want to know how it concerns us.
I mean, the first thing is that Brent crude is above our budget benchmark. Both the 2021 budget benchmark, which is $40 per barrel, and the current, supplementary budget benchmark, which is $30 per barrel. So this gives enough headroom and a possibility for an increase in forex in oil revenue for the government to meet up with its budget obligations. And at this point, this provides some, cushion for the limited forex supply that the CBN is currently battling with, that has triggered our exchange rate and our naira, that's triggered a lot of currency pressures and currency volatility over the past few weeks and months. So at this point, it's a good news for Nigeria, but at the same time, we also look at the fact that Nigeria is more sensitive to a change in oil production than prices. And the recent OPEC data released just about yesterday or 2 days ago showed that Nigeria's oil production declined to about $1.47 million per barrel. And million barrels per day. Yes, it declined. And so we're looking at that coinciding with an increase in oil prices. So at this point, it's not exactly a win-win situation for Nigeria. There could be some increase in oil revenue from oil prices, but we also look at the downsides coming from the decline in oil production as Nigeria seeks to meet its OPEC quota. But at the same time, looking into 2021, OPEC has agreed to ease output cuts by 500,000 barrels per day starting from January. We look at Nigeria's position in the cartel. Nigeria is a price taker. So whatever it's given, it just has to take that way. So on the hopes that OPEC, allows this for all countries, especially those that have been, cheating their quota, including Nigeria. If this happens, there would be, a possible increase in Nigeria's oil production, supported by the increase in oil prices, which is riding on the back of the vaccine optimism. I mean, in the US, we're seeing that vaccines are beginning to, roll out. The Pfizer vaccine was recently approved, and we're looking at increase in demand from Asia as well, supporting the increase in oil prices. So at this point, it's, it all rides on the fact that if this happens, if this happens, if this happens. So Nigeria is a price taker. So, I mean, we just have to take whatever we get at this point.
Well, we just hope that we get something that will be positive at the end of the day, because we've had enough bad news, so to speak. All right, now let's talk about something else now, away from oil. You heard my conversation with the Lagos State official now talking about the housing sector. And then one thing that we talked about was the issue of the recurring building collapse. Now, here we have the price of cement spiking. So how do we put that together? The price of cement has jumped by about 32%. How do we now address these major issues?
I mean, the first thing that we look at is that cement, is one of those commodities that people increase their demand when it's the dry season period. So because that's when a lot of constructions can happen. That's when a lot of houses are being built. That's when a lot of, roads are being built. And at this time, we've seen an increase in construction. I mean, just Lagos State, for instance, was seeing an increase in construction of roads, buildings, and all of that. And also, there's also private sector demand. We're seeing a lot of buildings, coming up. And this definitely has increased the demand for cement. And when we put supply-demand dynamics to play, we see that this alone, has triggered an increase in the price of cement. So definitely, as the season, because this is a seasonal commodity in terms of demand. So as the season, when the wet season comes, as the wet season, approaches, as the rainy season approaches, there could be, a decline again in the price of cement.
All right. Now, what about agri-commodities now? Of course, we've also seen a spike in some commodities like palm oil, which is at an 8-year high. That's some record there. And of course, major foodstuff like semovita and beans, which have also seen a surge in prices. What's behind those increases?
Yes, for palm oil, I mean, in the global market, the price of palm oil is actually, is really, really high, and that's because of an increase in demand from India and Asia. But however, looking at the outlook for the price of palm oil, we're seeing that there could be, a possible decline in demand from India, and this is because the price is really, really high. A lot of times, India and China are consuming this commodity. They're increasing their demand for this commodity. Or in time past, they have increased their demand for this commodity just because it is a better alternative, cheaper alternative to soybean oil and also sunflower seed oil. And now that the price of palm oil is almost going head-to-head with soybean oil, India is like, okay, we might, decrease our demand for this particular commodity. And when there's a decline in demand, the price of palm oil, would also decline. Looking at the price of semovita, bringing this to the domestic market, the major source for producing semovita is wheat, and we import wheat. And looking at the global market for wheat, there has been, an increase in the demand for wheat, which has also triggered an increase in the price. And we also look at the effect of the exchange rate on this. So there's definitely an increase in the import cost for companies who are, procuring this commodity, and this is definitely going to reflect in their prices. So that's why we're seeing that increase in semovita.
All right, Dumebi, there's this breaking story now that the World Bank has approved Nigeria's request for a $1.5 billion loan, which was requested by the federal government this year. Of course, according to the World Bank now, the facility is a 5-year country partnership framework. What effect is this likely to have, maybe on our reserves, for instance?
I mean, it's definitely a good news because this will definitely boost up our external reserves. External reserves have already declined to about $34.92 or $93 billion as at this morning, and that's a good news because now the CBN has some support to boost the naira and keep the naira stable to reduce currency volatility. But at the same time, if we look at this coinciding with a level of external debt accumulating, this puts the country at risk of a debt crisis. At this point, when we look at the level of Nigeria's external debt to external reserves, the ratio, it's widening, considering the amount of debt that we're accumulating. So even though this is a good news, looking at what happened earlier in the year with the IMF loan disbursement that we got, it give some temporary boost to the external reserves. But in the long run, we're just delaying the inevitable. We keep accumulating debt. Compared to our external reserves, I mean, we're just gradually gravitating towards a debt crisis if we're not careful.
Well, we hope it doesn't get to that point. So I'd like to thank you, Dumebi Iyeke, research analyst at the FDC. Thank you for coming on this morning.
Thank you.
All right, we'll be looking at the markets right after we go to London in just a moment. Do stay with us. But just before we head to London, the breaking story, another breaking story, is inflation data for the month of November has been released by the National Bureau of Statistics, showing that headline inflation edged up once again to 14.89% in the month of November. Food inflation was also at 18.3%, rural inflation at 15.47%, core inflation at 11.05%, and once again, the rural inflation is at 14.47%. Of course, we'll be bringing you more details about the latest inflation data in the course of the day, perhaps on Newstrack in a moment. But then let's turn to London now, where figures also released by the Office for National Statistics this morning shows that UK unemployment rate rose to 4.9% in the 3 months to October, and that's up from 4.8% a month earlier. Juliana Olayinka will be giving us a breakdown of the data released this morning. Good morning, Juliana. So redundancies have hit a record high of 370,000 in the third quarter as companies continue to lay people off, of course, due to the COVID pandemic, which has hit the economy. Well, could you unpack this latest not so good data from the ONS this morning?
Good morning, Bissy. Well, it's pretty much a continuation of recent trends. Of course, we've seen not just in Britain, across the world, that COVID-19 has completely ravaged the economy, crippled some sectors, particularly hospitality and retail. And what we've seen from the statistics released this morning from the Office for National Statistics is that since March, 809,000 people in Britain have lost their jobs. As you said, there has been an increase of 0.1% in the 3 months to October. So unemployment rates in the UK at the moment are at 4.9%. Some economists, some observers are saying historically still pretty low. Internationally, of course, still very, very low. But still we are seeing this increase. I think one of the concerns, and I know Chancellor Rishi Sunak is going to have a lot to answer for during Prime Minister's questions this week, is that this data really is due to the fact that for 3 months during this period, a lot of opposition party members, a lot of business leaders were urging, almost begging the government to extend the furlough scheme. I know Chimeze and yourself were asking me almost every single day whether it would be extended. The government point blankly said no, they wouldn't. But then we did start seeing this second wave of infections, and they knew they would have to go into this second lockdown. So the job retention scheme, just to remind our viewers, was, of course, this subsidy. So the government or the taxpayer were paying up to 80%. And this was to finish on the 31st of October, which is when this data compiles and comes to an end. So it's really reflected. There is some positives here. We have over 500,000 new jobs on record, which is good. We are seeing that some companies are beginning to employ again. And we do know that, of course, the job retention scheme has been extended in full until March the 31st. But of course, if you're one of those 800,000 people that have lost your jobs, this news is coming a bit too late. But they did project that it would be 5.1%, so 4.9%, much lower than some of the economists had predicted.
And now, Juliana, there's a warning about a new COVID strain being issued in the UK, and more than 60% of England will be facing tougher restrictions. But business leaders are warning about the devastating effects this will have on more than 53% of the hospitality sector. Of course, they argue that there is no evidence that that sector is a major source of outbreaks. Do they actually have a point here?
Right. OK, so we're talking about the tiered restrictions, aren't we? And yes, there was that breaking news yesterday that London and parts of Essex and Hertfordshire, basically the circle around London, will be pushed into Tier 3. Now, this has caused lots of concern. There has been an outcry from the hospitality sector, because if you are in Tier 3, that basically means pubs, hotels, restaurants have to close, and you're also restricted in the way that you can move. And we already know, because we've been discussing it consistently, that the hospitality sector has really had the lion's share of job losses and disruptions. And now, you know, leaders within that sector are asking why they have to shut their doors when, according to the science, and the government say they are following the science, it's mainly schools. Secondary school children appear to be the biggest spreader of COVID-19 in this country. Then, of course, you've got the retail sector. There have been some drone shots just a stone's throw away from where the studio is, showing Oxford Circus and places like Knightsbridge absolutely jam-packed with people shopping, no social distancing in place. If you're in a Tier 3 region, like London will be from Wednesday midnight, retail can still stay open. Pubs and the hospitality sector must shut. They're really not happy about it. They're asking for more government support. They're asking for more evidence. And I think a lot of our viewers would even know that some of their favourite places are stayed shut, even in the Tier 2, because they just cannot afford to stay open. So from Wednesday at midnight, this new Tier 3 restriction is going to affect over 15.5 100,000 pubs in and about London, and many of them are saying they will be shut for good. It's just not viable for them to be open and continue into the new year.
I can only imagine, Juliana. Thank you. I would have to wrap up at this point, but you'll continue the conversation with Chimi in the afternoon. We'll see you then.
Thank you.
Right now, back home, let's get a review of the Nigerian equities market from Edidiong Iwan. Good morning, Eddie. We saw a dramatic turnaround at the market on Monday. Of course, most of us didn't anticipate that kind of strong rebound, right?
You're right, BC. The bulls made an appearance yesterday, and just like Friday, when Dangote Cement sneezed and the market felt it, it was also similar to what happened yesterday. Although yesterday we saw investors' interest in shares of Airtel Africa and Dangote Cement. Now that pushed the all-share index up by 1.73% to 34,843.44 points. Now we've gotten back to the 18 trillion naira level. As of last week, Friday, we dropped to the 17 trillion naira mark, and then now we're back to the 18 trillion naira level. However, volume, value, and deals traded yesterday were much lower compared to Friday's session. We saw just about 208.09 million units worth 3.70 billion naira traded in 4,154 deals. Now, most of the sectors were negative yesterday. Banking was down, as we saw Zenith down 0.44%, and UBA was also down 0.62%. Consumer goods was down 0.93%, and that was due to the declines on international breweries and NASCO. Now, of course, industrial goods was up 1.51%. That was due to the 2% gain from Dangote Cement. Insurance was also up, while oil and gas was down 0.66%. Now, at the unlisted securities market, we saw the that segment of the market down 0.23% at 732.07 points. Let's talk to Phil Anegbe, a research analyst at Cardinal Stone Securities. Good morning, Mr. Anegbe. Thank you for joining us on the program.
Good morning, Edidiong.
Well, that was an impressive start to the week. Do you think that has set the tone for the rest of the week, or should we see some profit taking?
Well, we expect that for the rest of the week, flows are likely to be light and volume thin, and that's what we've seen for some trading sessions now. I think what is dictating market movement is actually expectations of yield reversals stoked by CBN's new short-term instruments. So for the rest of the week, you expect similar reactions. There may be some bargain hunting in some names, but you don't also rule out the possibility of some profit taking as well. There's going to be broadly mixed, with volumes largely thin and flows light as we move towards Christmas.
All right, Mr. Anegbe, yesterday, Airtel Africa was one of the drivers in the market. Do you have any idea what happened on that stock?
I think for Airtel Africa, it's the case for a few other stocks. Investors actually see them as opportunities to repatriate some sort of flows of funds out of the country. So they leverage stocks that have this kind of dry listings. Typically, I think at some point we saw the same for settlers. There were some cases where we saw some trades that were largely inspired by the desire to actually repatriate some money out of the country. So Airtel, a dual listed stock, is also likely experiencing a bit of that. Although it's been traditionally illiquid, it's not as liquid, so you may find that heavy changes from the upward trend that we've seen maybe few and far between, will not be likely in the short term, basically.
All right, Mr. Anegbe, thank you for your input on the program. Phil Anegbe is a research analyst at Cardinal Stone Securities. Well, basically, we'll just keep our fingers crossed and hope that those positive sentiments continue in the market for the rest of the week.
We'll wait and see if we'll get another pleasant surprise today. Fingers crossed. And that's where we end today's program. Thank you for watching. I am Bisi Adibayo.